Hello and welcome. I'm James Preston reporting to you live from 𝐊𝐶 Studios. It's lunchtime here in Sydney and you know what that means. It's time for the Mid-Market Pulse. In this show, stocks that top the gainers and losers chart will be in our focus, and we'll also take a look at some headline grabbers. But let's begin with the performance of ASX listed shares. Australian shares extended gains for the second day on the back of firm global cues and a flurry of company results. The surge in buying across energy, tech and gold mining stocks also supported the market. However, the concerns about consistently rising COVID-19 cases have limited the market's gain. The ASX 200 was trading 21.3 points or 0.28% higher by lunch. The index opened higher, tracking positive cues from Wall Street and gained as much as 0.4% to hit a high. In the overnight trade, US stocks ended at record highs as market sentiment was boosted by the US Food and Drug Administration, or the FDA, providing a nod to the COVID-19 vaccine developed by Pfizer-BioNTech. The move is likely to accelerate a vaccination drive in the US, boosted by the development. The Dow Jones also gained 0.6%, while the benchmark S&P 500 rose 0.8%. The Nasdaq Composite rose 1.5% to close at a record high. And back home, investors reacted to corporate earnings announcements, with some big companies such as Oil Search, Boral, Ansell, 𝐊𝐴𝐞, Viva Energy, Perenti Global, HUB24, Austal and Spark Infrastructure all announcing their financial results this morning. And we'll dive into some of those results in more depth shortly, but let's first move on to the sectoral front. 6 of the 11 sectors were trading in the red zone. The energy sector was the best performer with a 2.5% gain, driven by a spurt in crude oil prices. The Brent crude rose 5.2%, while West Texas Intermediate crude oil gained 5.3%. The energy sector was followed by information technology, which surged around 1.15%, tracking overnight gains in the US counterpart, Nasdaq Composite. Among others, material, financial and A-REITs also witnessed a surge in buying activities. Bucking the trend, the consumer staples sector extended losses for the second day, falling nearly 0.7%. Among others, consumer discretionary, industrial, telecom, healthcare and utility stocks were all trading in red. On the COVID-19 front, New South Wales reported 753 new locally acquired cases on Tuesday, compared to 818 cases that were registered on Monday. Premier Gladys Berejiklian said that New South Wales is on track to ease some curbs later this week as the state hits the target of 6 million jabs. Meanwhile, Victoria's daily case tally declined to 50, while the nation's capital, the ACT, recorded 30 new cases of COVID-19. All right, let's now turn our attention to the biggest gainers and losers into the mid-market session. Australian infection prevention company Nanosonics was the top gainer on the ASX, with 17.5% in gains. Some of the other notable gainers were digital travel business Webjet Retail, travel outlet Flight Centre Travel Group, real estate firm Centre and internet service provider Unity Group. On the flip side, engineering services firm Monadelphous Group topped the loser chart by falling over 15%. Some of the other worst performers were online retailer Kogan.com, healthcare firm Ansell, construction material group Boral, and health insurance company NIB Holdings. Well, it's time for a very short break, but stay tuned to 𝐊𝐶 TV as I'll be back on the other side of these messages with ASX listed companies that are in the news today on the Mid-Market Pulse. Tune in to get the latest information.
Whether it's about market movements or the currency graph,
sectoral coverage or industry news.
We cover it all on our news segments.
Be on top of the latest news
with 𝐊𝐶 TV.
Tune in to get the latest information.
Whether it's about market movements or the currency graph,
sectoral coverage or industry news.
We cover it all on our news segments.
Be on top of the latest news
with 𝐊𝐶𝐞 TV.
InvestNest webinar, 2 must-know ASX-listed emerging stories with Bruce Smallish, Managing Director, 𝐕𝐝𝐴𝐶 and Inderjeet Singh, Executive Chairman, Fiducian Group. Unprecedented times and volatile markets have completely changed the investment preferences amidst the market gyrations owing to the pandemic. Companies primed to ride trends are extending leads. Do you wish to hear stories of emerging companies that are making a mark on the ASX? Then you are in the right place, as we at 𝐊𝐶𝐞 Media get you the emerging stories of companies that are riding the wave. To know more about such promising businesses, grab your free seat for the InvestNest webinar by 𝐊𝐶𝐞 Media, 26th August 2021 at 12:30 p.m. Australian Eastern Standard Time. Hear about the success story of an Australian-based silica sand explorer, 𝐕𝐝𝐴𝐶 Limited. 𝐕𝐝𝐴𝐶 has been on the investors' radar for its attractive operational footing, buoyant market opportunity and stock returns. To discuss the key attributes of our client, 𝐕𝐝𝐴𝐶, and its future plans, we will have the Managing Director of 𝐕𝐝𝐴𝐶, Mr. Bruce Smallish. And not just this, unravel the journey of a specialist financial services provider, Fiducian Group Limited. Our client, the Fiducian Group, operates across Australia and offers its services to financial advisors as well as retail and wholesale clients. The company provides premium wealth services and solutions to its clients, delivering double-digit returns to its shareholders over the last 5 years. To discuss the company's future plans, we will have the Executive Chairman of the Fiducian Group, Mr. Indy Singh. Do not miss the exclusive InvestNest webinar by 𝐊𝐶𝐞 Media to hear from the business honchos themselves. Block your seats now for the exclusive webinar, August 26, 12:30 p.m. Australian Eastern Standard Time. Stay apprised and invest wise with 𝐊𝐶𝐞 Media.
Thanks for joining us on 𝐊𝐶𝐞 TV. I'm James Preston, live from our studios in Sydney for the Mid-Market Pulse. And it's time now to turn our attention to shares that have grabbed headlines today. The share price of oil and gas producer Oil Search climbed nearly 3% post-earnings release, with revenue rising 7% in the first half of the year, while core net profit zoomed 463%. The company, which has announced its merger with Santos, declared an interim dividend of 3.3 US cents per share, its best dividend since 2019. The company's acting Chief Executive Officer, Peter Fredrickson, said the result pointed to the resilient operational performance from within the business, as well as recovering conditions in the market. Mining services company Perenti Global shares rose nearly 2% following the release of its earnings report for the 2021 financial year. The statutory net profit after tax and amortisation stood at 75.3 million Aussie dollars in the second half of the financial year for 2021, compared to a first half statutory loss of 63.8 million Aussie dollars. Revenue slipped marginally to $2.02 billion from $2.04 billion in the 2020 financial year, while underlying earnings before interest, taxes and amortisation fell to 170.8 million Aussie dollars compared to 211.7 million Aussie dollars in the prior period. It declared a final unfranked dividend of 2 cents per share for a total dividend of 5.5 cents per share for the year ending 30th of June 2021. Ansell, engaged in manufacturing of protective industrial and medical gloves, saw its shares falling over 9% despite declaring record dividend for financial year 2021. The company announced a final dividend of 43.6 US cents, its highest dividend payment on record, after it reported robust growth in its earnings. The company's sales surged 25.6%, while profits jumped 57.5%, and the earnings before interest and tax rose 56%. The company said that its earnings numbers were driven by strong demand for its products in light of the COVID-19 pandemic. Australian engineering firm Mondelez Group's shares have dropped 15% after unveiling earnings for the financial year of 2021. The profit rose by 29%, while revenue surged 18%, helped by a surge in demand for its services, especially in Western Australia. The company also declared a final fully franked dividend of 21 cents per share, much higher than 13 cents paid a year ago. Well, it's time for another very short break, but stay tuned with me on 𝐊𝐶𝐞 TV, as I'll be back with more ASX listed companies that are in the headlines for today.
Hi, I'm Sage, and get ready to take the crypto ride with me on 𝐊𝐶𝐞 TV. Watch the crypto buzz every Tuesday and join the excitement at 𝐊𝐶𝐞 TV. From Bitcoins to NFTs to Dogecoin and DeFi, we have updates about everything around these digital currencies. Understand the investing rationale and the risks involved in the space with me, Sage, on Crypto Buzz. Keep watching 𝐊𝐶𝐞 TV.
Welcome back, James Preston with you, and you're watching the mid-market commentary live from Sydney, where we're taking a look at the companies that are in the news today. Let's move on now to financial services firm HUB24, whose shares have nosedived over 14% even after it hiked dividends following growth in its earnings. The company declared a final fully franked dividend of 5.5 cents per share for the 2021 financial year, up 57% compared to the last fiscal quarter. Meanwhile, net profit after tax jumped 53%, while underlying group earnings before interest, tax, depreciation and amortisation rose 47%. The share price of global shipbuilding company Austal tumbled over 12% after it reported a drop in its earnings. The revenue dropped by 24.6% for financial year 2021, while earnings before interest and taxes declined 21%. Net profit after tax stood at 81.8 million Aussie dollars compared to 89 million Aussie dollars in financial year 2020. Moving on, an Australian investment fund, Spark Infrastructure, shares gained nearly 0.5% after it released results for the 6 month ending June 30, 2021. The regulated and contracted asset base increased by 4.5% in the first half of the year, while look-through net operating cash flows rose 6.6%. Shares of medical technology company Nanosonics rallied over 17% on the back of robust earnings. The company reported significant growth in the second half of the financial year 2021, with revenue rising by 39% compared to the first half. For the full year, the revenue increased by 3%, while operating profits before tax dropped to 11 million Aussie dollars from 12.4 million Aussie dollars in financial year 2020. The company's global installed base surged 13% to 26,750 units. Construction materials manufacturer Boral saw its shares dropping over 5% after it scrapped dividends despite a rise in profit. The profit rebounded to 639.9 million Aussie dollars in financial year 2021 compared to a $1.14 billion loss a year earlier. The revenue dropped 6.7% to $5.3 billion. Well, that's all in the mid-market pulse for today. Keep watching 𝐊𝐶𝐞 TV for the latest reports on Australian share markets, commodities, cryptocurrency and much more. I'm James Preston, signing off for now.